Looks like we're live. We're live. Hello friends, welcome back to our YouTube channel. In this live stream, I'm going to update you on the reality of Southern Utah real estate market and how things are getting or not getting done in this absolute madness. For those of you that don't know me, my name is Nick Rastopchin and I run one of the top performing real estate teams right here in Southern Utah. In fact, as of month to date, our team is ranked number 15 out of 2,000 plus agents. I don't even know how many agents we have in our market right now, but I just looked at the stats and I'm very, very pleased to see that we're absolutely at the very peak of our performance as a team. And for that, I'm thankful to all of you that chose to do business with myself and my team. So thank you so much. But without further ado, let's just jump right into it. Let me get all my distractions out of the way. So the month of March is in and the numbers are finally posted. So I want to talk to you guys about a couple different things. It seems like the Fed is continuing to raise interest rates, but the buyers are just staying super persistent. And a lot of economic analysts and real estate investors and realtors are referring to this as a FOMO-driven market, meaning that people are seeing the interest rates go up, and instead of doing what the Fed had intended and slow down the economy and slow down the purchasing power, people are continuing to make ridiculous offers. So this FOMO-driven seller's market is producing something that we haven't seen before. Sorry, I had some audio in the background. So this FOMO-driven seller's market is producing some crazy things that we haven't seen before. Just to give you guys an idea, my team and I submitted around 5 offers over the last weekend. Out of 5 offers, most of them were anywhere from 20 to 80 grand over asking. And so far, all of them got bid out. And those are the ones that responded. Some of the sellers aren't even responding to offers yet because they're receiving 15, 20, 30 offers, depending on how long the property is being listed on the market and depending on how long the sellers are taking to respond to it. So why is this happening? Well, I think the only rational way to explain this is people are seeing the interest rates go up. And if we look at the interest rates right now, just go to Google. You could always Google current interest rates. And as of April 15th, this data is current. Average 30-year fixed is at 5.73%. Now, that's provided that the average credit score is between 760 and 779. So you see this reference a lot. Like for instance, if we go to MACU's website, interest rates are listed somewhere right around 5% for prime, but that's provided that you have a perfect credit. Average American is somewhere between 720 and 739. So we're very much stepping into the 6% interest rate territory, and things are becoming a lot less affordable for a lot of Americans. However, this isn't translating into the reality of our market quite yet. So I'm curious to see what that will do to our market within, I don't know, say another month or so. What's really crazy is that a lot of people, a lot of whistleblowers, a lot of people that create this sort of content are starting to talk about our year-over-year performance and the fact that a lot of places, you know, they're having these loud announcements that the bubble is starting to burst, that they're beginning to see a crack in this bubble and things are beginning to change because of 30% or 40% inventory increases. So if we look at Southern Utah, our inventory has actually increased. So absorption rate is a number that tells you the stat that basically tells you how much supply we have. So if we look at March of 2022, we're sitting at 1.06 months of supply versus March of 21 at 0.71. So that's nearly a 49% change. However, most of the people that distribute that sort of content fail to tell you that even with a 49% increase in our inventory, we're still sitting at barely just a month worth of inventory. So right now, our market, as of March, our market had a total of just 450 listings. And that's in comparison to What's normal for our market is around 2,500 listings. So the amount of supply is still not overwhelming, and I don't see that issue getting fixed anytime really soon. So what is driving these prices? What is driving this market? Why are people continuing to buy in this insane market? It's a question that we get asked very often. So, and who is buying these homes? Who are all these people that are coming in? I think our average is around 37% cash offers, and that's a national average. So there's a great amount of cash. And if you think about it, real estate in general, there's not a ton of new wealth that's being created. So real estate in general is wealth redistribution. It's homeowners in other states, homeowners within this state that are selling and reselling and redistributing that equity from one property into the other. So why are the people continuing to buy in this market? People are continuing to buy because they're able to move here from other places. And let's say if you sold a beautiful 1960s 15 or 1600 square foot somewhere in LA County for around $1 million, well, in southern Utah, $1 million still gets you something really, really nice in comparison to that historic piece of real estate that you were able to get out of. People are able to move around more because of the beer virus economy created a lot more opportunities for people to be able to keep their high-paying job and move to a nicer, better, safer area, which St. George still is. And folks, my intention for this live stream is to remove my opinion as much as possible and share some facts with you, because in some of our previous videos, I've talked about St. George and how much I love living here and how I feel that it's a nicer, cleaner area than most places that I have experienced. And those are my opinions. And as of lately, I'm getting a lot of angry comments with people telling me that it's too expensive and it's not for everybody, this, that, the other, religious preferences. Folks, opinions that I'm sharing in this video are my opinions. I'm not an economist. I'm a real estate agent that is getting it done in this market, and take it for what it is. However, I do have the numbers to back up most of the things I'm sharing with you in this video. So real quickly, let's just dive back into the numbers so I could tell you guys what we did in the month of March, and then we can kind of digress and talk about some of the things that may be affecting this market a little bit more. So in the month of March, and these are the numbers that are the most concerning to a lot of buyers, we had just 1 month of inventory. Our average list price was at $1,138,000, which is crazy. It is up by 42%. In March of 2021, it was just $797,000. So considerable jump there. And I'll dive into exactly why this is happening. There's a relatively easy way to explain that. Our median sale price was at $577,000 this March versus $449,000 last March. That's a 28% jump. And our median combined days on the market was just 8 days. So things are selling super fast. Now, if you're thinking about making an offer in this market, another important thing to know is a sold to list ratio. If we look at this graph right here, December of 2021, we saw some things going on sale, but by March, we're back up above 100%. And this is a number that's representative of a total market across all price ranges. So if we look at stuff, say in a $500,000 and below, a lot of these listings in this price range, so if we go $500,000 to $749,000, that's kind of a widest range of listings. That's where most of the market is at. A lot of these listings go way, way, way over asking. So they go anywhere from 10 to 15% over asking because that's the largest pool of buyers. So that number is a little bit skewed. Some of the stuff at the top is undergoing discounts, and the situation may be a little bit different, but this is a huge segment of the market that's contributing to driving those numbers. We saw just a total of 450 listings this March compared to 336 last March, and 492 new listings hit the market this month versus March of 2021. So there was just a small 7.4% increase, and a total of 423 listings went under contract versus 469 listings last year. So actually fewer listings went under contract. And I feel like from just talking to other fellow real estate agents, I had this conversation with a number of folks, just kind of venting, you know, we do that sometimes. And it seems like we spend more time trying to keep deals together versus putting new deals together, because what this market is creating for a lot of buyers and sellers, and it's a double-edged sword, right? As a seller, you want to be able to sell your property with multiple offers for the most amount of money possible with the most amount of security guaranteed. So what happens is buyers start to get burnt out and frustrated, and they start just writing multiple offers on multiple homes. And in the end, people end up overcommitting. So people end up writing offers for more than the property is worth. Just to kind of give you an idea, this literally happened last weekend, and I don't know who the lucky buyer is. I hope that you did the right thing for you. I couldn't justify it. We had a client that wanted to offer around $470 for an 1,100 square foot home. So if you do the math, that's what my head math is broken right now. So let's call it, what, about $450, $460 per square foot. So our offer ended up getting bid out. Now we're talking grade C real estate, right? It's not beautiful. It's not a luxury home. Something that would be okay as a starter home or maybe a rental that is selling at the peak of the market. Like if we look at the median price for a larger home, we're somewhere between $300 and $330 per square foot. But when you're pushing these listings up to $500 per square foot, at no point, I don't think, and you know, I don't hold the crystal ball, but this will make sense for the person that's buying it. So what starts happening is a lot of these offers begin to fall apart. So if you're thinking about listing your home in this market, you may have a limited window of opportunity, and I would definitely invest your time in interviewing the right agent, making sure that the agent that you're hiring for the job knows this market and knows how to deal with these multiple offer scenarios, so that you're not just getting excited over, you know, an offer that would never come to fruition. So you're not just going after the offer with the least amount of security, or at the very least you have a backup plan. For those of you that are interested about exploring opportunity in listing your home in this crazy market, there's a link in the description below this video. You can just provide your information, and I could provide you with a complimentary guide that will kind of give you a pretty good idea on what your home is worth, and we could put together a seller nat sheet that will give you an even better idea on what you could put in your pocket and walk away with after selling your home. One of the other, let me take a look in the chat, see if we've got any questions. So with this video being live, you guys are welcome to drop your comments. I've committed to keeping things kind of short and sweet. So I'll try to cover as much as I can within the realm of this video. If you have any further questions, or if you're watching a recorded version of this, feel free to drop your comments below. And of course, I will give you my contact information. So feel free to text me, call me, or email me. I'm happy to answer all and any of your questions. So let's talk a little bit about why are things costing so much? Well, there's some of the obvious, but I'm not going to point fingers at Brendan and the economy that he created. However, that is a large contributor. So we're in a demand-driven market, and with the events of the last 2 years, things are getting a lot less secure, a lot less stable, and a lot more expensive in a lot of the Pacific West, a lot of the larger cities. People are starting to choose better pay by keeping their existing jobs and then moving to the areas where it's a lot safer to raise their family, it's a lot safer to live in general, and a lot easier to survive, right? So people are selling their homes in LA, people are selling their homes in Manhattan, and they're choosing Utah, they're choosing Florida, they're choosing areas that are just much better for their families. And as a result, our population is experiencing insane amount of growth. And St. George, according to the census studies, St. George has been ranked #1 again. Let me show you guys this article. I don't know what happened. There we go. So St. George and the rest of Washington County have once again ranked as the fastest growing metro area in America, according to a new report from the U.S. Census. And if we look at this list, I'm sure you're all probably familiar with the top cities on this list. As of April 1st of 2020, estimated population in St. George was around 120,000. By July 1st of 2021, it was at 191,000, nearly a 5.1% growth. And that's almost a year ago. I'm actually really excited to see what those numbers look like right now. And I'm sure a lot of the locals are not as excited about seeing those numbers because growth brings some challenges, and challenges with infrastructure, challenges with affordability, challenges with availability of land. And that actually brings me to my next point. So cost. Why does it cost so much to live here right now? And when I say it costs so much to live here, I'm referring strictly to the segment of real estate. So average pricing for a new build, right? So how do developers and investors structure their pricing for their listings? So how do you build a new home and make sure that it's not overpriced or underpriced for the subdivision? Kind of a general rule of thumb is pricing the property about 4 times the worth of the lot. So if we look at an average land listing right now, so a quarter-acre lot or smaller is typically from $200,000 to about $250,000. So naturally, if we look at this metric here, median list price is at $1.138 million. So if average lot costs about $250,000, naturally every new home that is being built on that lot is going to cost at least $1 million. So cost of raw land is driving the overall cost of new construction, probably one of the biggest drivers. Cost of labor. When you used to be able to hire framers and general laborers around $12 an hour, now nobody will show up to your job site for under $30 an hour. Let's say you're a big-time developer and you're developing hundreds, maybe thousands of acres at the same time. Cost of fuel and cost of labor is going to attack you there, driving the overall cost of land up. So then when you subdivide it and sell it, is going to end up rolling down to the end consumer, to the buyer. So cost of materials, of course, and the back orders. In fact, a lot of these materials we're waiting for. I don't know if you guys have been following our progress on our Dixie Springs spec. That home is tracking right along. We're hoping to get it finished by the end of June, hopefully at this point. But we've been waiting for windows for about 5 weeks. And there's no exact ETA in mind at this point. So if any of you are interested, it is a beautiful spec. It will have a custom build with a double RV garage, almost 2,000 square feet of garage square footage. That was my shameless plug. I'll link the link to the video on a tour of that home. And in fact, I've got one more really exciting video coming up with one of our preferred lenders telling you on how to buy new construction right now. Because what happens if you were to commit to purchasing $1 million home right now and you can still manage to afford it at 5% interest rates, but what's going to happen 9 months from now? Nobody knows, right? My crystal ball has been broken for a while, so I couldn't tell you either. However, one of our lenders has a great program that allows you to lock in that rate on new construction at whatever that rate is at right now. And basically, you'll be able to sleep at night and know that your rate is locked and you'll still be able to afford the new beautiful home and actually get excited about building it. So, losing my track of thought here. Couple other things that I wanted to cover with you guys is just overall logic of this market. Like why would you buy here right now? I've been trying to answer that question for a lot of our clients, and it's a supply-demand driven market. It's hard to tell what will happen to it in the future and when will it cool off. I think a lot of people are making some pretty aggressive projections. A lot of agents that I talk to, and myself included, everybody on our team, we don't see this huge cool off just based on the costs that I shared with you guys earlier. I think we're definitely going to see a little bit of a knee-jerk reaction. We're starting to see it in the market right now. So if you're thinking about selling, right now may be a good time to do it, because I don't know how much higher this market could drive itself. You know, you can only boil the frog so much. So the interest rates are inevitably having an effect on buyers. We're seeing some of our buyers that are starting to get priced out, because if you were able to afford your monthly payment at 3.5%, what is happening to that payment when, you know, say you're purchasing a $500,000 house, and now instead of financing it at 3.5%, you're doing it at 7%. So you're adding a couple $100 to that monthly expense. And a lot of people are starting to look elsewhere, or just kind of wait before they can afford to move. So, and those that feel like they can afford to move, especially those that are transferring equity, guess what? Real estate markets are really high everywhere. We have friends and clients in California. We have friends and clients all over the Pacific West that are still selling their homes in record time. And you sell high, you buy high, it's kind of a wash. It still makes sense. However, if you're not in that dire need, I feel like things may be changing in the near future. And again, crystal ball is broken, but I'll just share some of this data with you guys. One of our partners, Untitled, shared with us that she's recording literally thousands of acres of raw land that is being developed right now. Now, previously in this video, I told you about the overall costs because of cost of labor, cost of diesel fuel, cost of pretty much everything all around us. So I don't anticipate for that raw land to majorly go on sale. The builders and real estate developers know what they're doing, so they're not going to flood the market with listings. However, I feel that within probably the next 6 to 12 months, we're going to see a little bit more inventory for two reasons. One, fewer people will be able to afford that lower entry-level real estate, which in a sense trickles up, because fewer people are selling at the bottom, fewer people are buying at the top. So naturally, we should see a little bit more inventory on the market. However, the real gamble that nobody could give you an answer to, and only time will tell, is what will happen to the cost of opportunity. So sure, maybe you're buying something for less in the future, but if the interest rates are approaching double-digit numbers, your monthly cost perspective ends up kind of equalizing things out. So if you're thinking about selling and buying right now without waiting for too long, might still be a good opportunity, because you're able to kind of wash out all of the market madness as you're selling high and buying still high. You know, nobody's getting a deal right now, but whatever we do know seems to be more certain than the stuff that we don't know, especially given all of the madness that is happening in the world and in the US right now. I hope you guys found this video useful. I feel like I rambled on for a bit. If you have any questions, comments, concerns, please drop them in the comments below. My contact information is right here. Feel free to call me, text me, email me, contact me on social media. I'm here for you guys, and thank you all so much for tuning in and checking out this video. If you know of anybody that could benefit from this information, please share the link, and I will see you all in the next one.